Now we can pull everything together into our cash budget. This normally would not be prepared until all of the other budgets had been prepared. That is because so many of those budgets will affect the cash balance. All right, the beginning balance is given. We'll add cash receipts. So beginning cash was given to be $6,000. We calculated cash receipts to be $166,000. We can now subtract our cash disbursements. It is a good idea to organize your disbursements according to the different reasons that a company would need to spend cash. I like to think about what will my cash disbursements be for purchases of materials, what cash disbursements will I have for direct labor, cash disbursements for manufacturing overhead, cash disbursements for selling and administrative costs, and then any other cash disbursements. Things like purchase of equipment, payment of dividends, things that would not have been included in your expenses on your income statement. That will leave a cash excess or deficiency. Now recall that we were told what purchases were for January and February, and we were also told how we paid for those, and we calculated that payments during January would be $41,440. Direct labor and your other expenses. Let's review the information given. Direct labor costs in January are $41,600. Manufacturing overhead during January is $20,800, which includes depreciation of $600. We have out-of-pocket selling and administrative cost of $42,000 during January, and depreciation on selling and administrative facilities of $2,000 per month. Also note that equipment will be purchased in January for $10,000 cash. I went through and identified in the information provided what would affect cash disbursements. Direct labor, $41,600 is the amount we'll spend on labor, and typically you have to pay for that in cash. Manufacturing overhead, the total for January is $20,800, but that includes $600 of depreciation, which is a non-cash expense. So our disbursements will be $20,200. The selling and administrative cost, you could find the total for January, which is the $42,000 of out-of-pocket costs and the depreciation together, or you can just simply put in the out-of-pocket $42,000 of expenses. The purchase of equipment is $10,000. So when we add all of this up, beginning cash plus cash receipts minus cash disbursements, we see cash excess or deficiency. This is where a company will need to evaluate if they're going to need to borrow money. That is, they'll look at their financing section. In your financing section, you'll have to consider, do we need to borrow any money? Will we be repaying any principal? And will we have any interest payments? And you'll need to factor in any required minimum balance. Let's review what Noah and Company policies are related to cash. They'll have a new policy that requires a cash balance of $20,000. They can borrow money at the bank up to $25,000. The annual interest rate is 6%. There were no loans outstanding at the beginning of the year. And borrowing occurs at the end of the month, and principal will be paid the next quarter. Interest owed will be paid each month. So when we factor this in, we first look at the fact that we need a beginning or an ending balance of $20,000. because we had no beginning loans, we'll have no repayments, we'll pay no interest, and we can work back to see that we will need to borrow $3,240 during the month of January. We'll put the numbers in for the February cash budget just to show you how the second month would work. We will begin with $20,000 in February since we end January with $20,000. We're going to add our cash receipts that we calculated from sales. That's $217,000. The disbursements, those just come from the February numbers. You can go back and look those up if you'd like to know where they came from, but we calculated disbursements for purchases to be $45,280. Direct labor costs are $45,600. Cash disbursements for overhead will be $20,700. Cash disbursements for selling and administrative expenses $46,400. And our cash excess or deficiency will be $79,020. Now, because that is well above our minimum, we know that we will not be borrowing funds. We will not be repaying anything since we don't begin repaying our note until next quarter. We will have an interest payment of $16, which will leave us $79,004. Note that the overhead was $21,300 in total in February, $600 of which was depreciation. Total selling and administrative expenses were $48,400 during February, so $46,400 was cash disbursements since there was $2,000 of depreciation. The interest calculation, our loan amount is $3,240. It's 6% per year. February is 1 month out of the year, so we'll multiply by 1/12. And rounded, that number comes to $16 for the interest payment. And it is paid at the end of the month. Next up will be the budgeted balance sheet.